What's up, everyone? My name is Keith. Today is December 22nd, 2021. Thank you very much for tuning in to another crypto market update. Like other crypto market updates, we will be looking at the price of Bitcoin, alts, we'll be taking a look at dominance, but we will first look at on-chain analytics. We haven't really dove in too much to on-chain analytics within these videos. We have been talking about it more within our Discord, but we'll definitely look at that within the start of this video. So before we jump right into the data, the charts, we just wanted to quickly go over our new website that we just launched yesterday. It is performante.ca. You can find it within all our links that we have in our social medias as well as our Discord. Quickly going over it, if you want to check out any of our social media channels, you can check all that out right there. We have the data and analytics still under construction, but you can see some pretty cool, interesting analytics within that section. Moving down to the page, we have the chart of Bitcoin, inflation adjusted because we're dividing it by the money supply of the US, M2 money stock. We have some on-chain analytics here, like the market value to realized value. We have the velocity of BTC, some pretty cool stuff, dormant circulation for wallets that have had dormant BTC for over 2 years. Pretty interesting stuff. And then we have the dominance for whatever project that you're looking for, Link, Uni, XRP, Near Protocol, all that stuff. Near Protocol is doing pretty well clearly recently. And then we have the active wallets, both for like the actual number of wallets that are active, as well as the percent change, both in daily change as well as weekly change. So we can kind of have a good understanding if there is higher transactions within the network or lower transactions within the network. That would play into the velocity of the cryptocurrency. And we also have that for Ethereum as well. Down here, we can see that we have both global macro and crypto markets. So this particular video will be presented here. And then for more like VIX, S&P, more traditional market stuff, we'll be putting in the global macro. And then we have our blog post here, and we will be posting a newsletter. We did initially have a newsletter, and then we stopped it momentarily. And we are going to be starting up the PCC newsletter, the Performante Community Culture newsletter. So definitely check that out if you haven't signed up already. So that's going to be the first little introduction to our video. Hopefully this is a useful website. This is version 1, so we will be implementing more features, functionalities, more options within the website itself. So this is like probably the most basic it's ever going to be, and it's only going to get more advanced, more useful, more leverageable from this point onwards. Jumping right into the charts, we first want to talk about a little bit of on-chain analytics for BTC. The first topic that we want to discuss is the total futures, the total amount of futures that are leveraged, or the total amount of value that is leveraged in the futures market, I should say. That'd be a better way to phrase it. And we can see that Binance, the centralized exchange, is increasing its open interest significantly. Hopefully you can see it within this chart here. You can see all these different exchanges. You see Bitfinex, BitMEX, Bybit, CME, Deribit, FTX, Huobi, but Binance is by far taking the lead with around 28% of the total open interest for the futures market, which is a significant amount. So a lot of people are opening positions, both long and short, and we'll take a look at kind of the difference between if they're long, if they're short, who's actually opening these positions. So we'll definitely take a look at that next, but just wanted to kind of showcase that we are in a potential squeeze territory. If a lot of people have open interest or a lot of people have open positions, that means obviously with the futures market, it's leveraged. That means if there's high open interest, there's a chance of either a long squeeze or a short squeeze. We had that long squeeze, which we'll look at within the data in Binance back in early December, where we had that big capitulation to the downside, which took out a lot of long or open interest on the long side. So we do see that coming in, except in this time, we're seeing a lot less long positions open up, and it's a little bit more even. So if we do start to see that momentum come into the market, we could see a short squeeze if the momentum is to the upside. Doesn't mean it's a guarantee, but just basically when you have a lot of open interest, whichever way the market's going to go, it has a tendency to continue moving in that direction. Because the people who are on the opposite side of that trade, who are obviously in the red, in the negative, they have to close their positions. And if there's a lot of short open positions, then they have to buy back in order to exit the trade. If there is a lot of long open positions, they have to obviously exit by selling, which would then put more pressure onto the market to the downside. So when we are looking at it kind of in a more comparison way, look how much Binance is, and let's just zoom this out a little bit here. Futures, open interest change in the last 2 weeks, we see that Binance is just absolutely dominating the open interest in the futures market for crypto. We see some of them actually have net outflows, but Binance is just absolutely dominating the market within the last 2 weeks. They have over $1.5 billion in open interest on their exchange. And this is going to be the actual open interest for Binance. We can see the first top chart here. This is going to be representing the open interest. We see that the yellow is open interest, and then the gray line is the nominal value of the open interest. And we can see back in, let's say, mid-December 13th, as well as like the 10th, we see the open interest at around $1.8 billion. As of right now, it is just a little bit over $3.5 billion, so not exactly double, but we are still seeing a lot of movement to the upside here. If we push a little bit further, it'd be getting close to that doubling. So a significant amount of open interest has been created for the futures market at Binance. And we can see the comparison against the sellers and the buyers, or the bulls and the bears, for a couple of different options here. This is the top traders long and short, and then we have on the bottom the positions. So the main one that we'll be taking a look at is the accounts for the top traders for the long and short ratio. We see back in December, kind of like very early December, is when we started to see that move to the downside. And on the 3rd or 4th, depending on where you're located, is when the capitulation event occurred. And we can see the 1st, 2nd, 3rd, we see that the open interest was heavily shifted in the long bias. We see 80% of open interest was longs, and only basically 20% of open interest was for the shorts. And then the big capitulation event occurred on the 3rd, 4th, somewhere around there. Like I said, depending on where you're located, depending on where you're living, and it significantly shifted from, let's say, 80% longs, 20% shorts, all the way to, let's say, 32% shorts, 67% longs, and it's been kind of stabilizing within that zone since. So compared to what we saw back in late November, early December, we have been seeing a lot of the longs just kind of get liquidated. There's a lot less long open interest, which is good. You don't want too much long open interest in the market when you're looking to long. You kind of want to be a contrarian to some degree, and ideally you'd like to see a decent amount of sell pressure coming in, or in high amount of open interest on the sell side, because if it does start to rip up in terms of the Bitcoin price, short sellers will have to get out. There will be a short squeeze, and that will create more momentum, and that's going to be really good for the price action of not only Bitcoin, but for the rest of the cryptocurrency market. So we are seeing some shorts piling in, not nearly as much as we saw in like other previous short squeezes, but we do see, let's say compared to like very early December, late November, when the longs were around 80% of the market, it is a much different picture right now at longs only at 63% of the market. So there's a higher amount of short sellers that are expecting the price to go down. If we do start to see that momentum breaking that around 53K for Bitcoin, that could be a very phenomenal opportunity for the longs, because shorts have to get out, they're going to buy back in. Longs are already locked into their position, and we could be seeing a rally, kind of like we saw the first recovery that we were in kind of in the fall time of this year. So really great to see. And then we can see kind of a similar sort of picture for the long and short ratio during the very early point in December or late November. We saw the long short ratio at like over 80% longs, under 20% shorts. And what we see right now is a lot less longs and more shorts, which is good, a little bit more even. And ideally, if you are a long-term investor, you are looking for more shorts, which gives an opportunity for a short squeeze here. So looking really good. There's no guarantees for which way it's going to go, but having higher open interest will give the price more explosion if it starts to get that momentum either to the upside or to the downside. My speculation that it is going to be moving to the upside, but hey, there is no guarantees in life. So that's going to be the open interest that we're going to be looking at for Binance. Just something to consider. It's not like it is going to be an imminent piece of information that we need, but it's good to be aware of the increasing open interest on Binance specifically, so that if there is a significant shift in price either to the upside or downside, you're prepared that the momentum is probably going to be continuing. The last thing we'll be taking a look at is the long-term holders. This is the change for a time frame of 7 days. And we see the price action of Bitcoin. This is just in black. Hopefully that is looking somewhat similar to that you recall of the price of Bitcoin. And then in the yellow, a lot less known of a chart. This is basically the change in the long-term holder supply. So if long-term holders are selling, this chart is going to be going down. If long-term holders are not selling, if they're just holding, then this chart is going to relatively remain steady, as we can see right here. And the previous times that we had massive sell pressure from the long-term holders would be the low points right here. So negative 4.8, negative 2.1, negative 2.1, and 0.6. And this chart kind of compares what the actions are from the long-term holders when you're looking at a large time frame for Bitcoin dating all the way pre-2017 high bull run. And we can see during the big rallies, we do see long-term holders selling quite significantly in terms of the daily change. Like over 2% is a point in which long-term holders are expecting maybe a high or a top, or they are kind of reducing the amount of exposure in Bitcoin because they probably think it is overvalued or near a top or in the parabolic stages of BTC. So that's definitely really good to see when there is a sell-off, but you don't see the long-term holders reduce their exposure or sell into the market, which is really good to see because we have seen in previous times long-term holders be relatively accurate in terms of their calls, in terms of the selling close to or near the high. 2017 wasn't ideal, but you do see it did go below that 2% when it was pretty close to the high. Obviously, no one's going to get it bang on to the T, but we do see that long-term holders have been pretty solid in terms of when they are getting out of the market and when it would be a good time to actually get out of the market. So we're not really seeing long-term holders exit the market yet. So this is a positive thing because the long-term holders of Bitcoin are expecting a further rally or a continuation of the bullish momentum that we've seen for the past, I guess, 2 years here. Since the COVID breakdown to the downside, we've really seen a strong push to the upside, and the sellers for the long-term holders are still not really prevalent. So that's really good to see. Now we're going to be jumping into the crypto market update, basically looking at a bunch of different charts here. We'll first take a quick look at the more traditional markets. We're going to jump right into crypto, but this is really important to understand. We have been seeing the S&P hold that $4,500 zone, previous major level of resistance turning into new level of support. We have been range bound around 47.50 to around that $4,500 level of support, but we are still holding. We've made a higher low from the low that we had in December 2nd, which is fantastic. It kind of does look like we are squeezing here. If we kind of connect the lower highs, it does probably form a more horizontal zone of resistance than anything. But we do see a series of higher lows that we can connect with a trend line, which does indicate buy pressure coming into the market. Bears are not able to push the price down below the previous low, which is a sign of bullish momentum, picking up the price, coming right into the market within a low, creating a higher low. Really great to see for the overall market. And then the VIX dropping, really great to see if you're looking at it from a long time frame. The around 30 zone was a major zone of confluence for the sellers. They were able to bring the price right back down, and we're just continuing the consolidation of this long-term chart, which is really great to see. Ideally, it'd be nice to see the volatility come back down to like 15. We may see a spike a little bit higher up again, but right now we're seeing a reduction in volatility for the trad markets, which is really great to see. And then for the Nasdaq, very similar picture. We are consolidating here. We could form a nice little descending zone here and then just connect the higher lows here. And we have somewhat of a descending either wedge or channel, like so. And we haven't really broken out yet. We do see a nice little support right around there. So the major zone of confluence for the NDX or the NDQ, Nasdaq, whatever index that you are trading, around 16.5K would be a nice zone of confluence for us to break to see that risk on momentum continue to the upside. And then in terms of the larger time frame, just like the S&P, we do have a previous key level of support turning into new, or previous key level of resistance turning into new key level of support. So that's really great to see in terms of larger time frames. It does look structurally sound. We're just really waiting for that next strong push to the upside to emerge, where then the risk on sentiment will continue for not only the traditional markets, but for the risk on markets as well. So really great to see overall. We're going to be moving on to the price action of Bitcoin. So this haven't really gone over it, but this is going to be the 6-hour chart, 1 day, 4 day, and the weekly. So basically we're only looking at larger time frames really. And what we're currently at right now is really just a very, very long-term consolidation. We haven't really formed a strong higher high since the peak of summer of 2021. We did form a higher high at around 69K, but we immediately got rejected, forming a slightly higher high, which isn't fantastic. A lot of people have been talking about a potential ascending wedge, which we can see kind of would look something like this. And then let's just quickly draw in what potential possibilities could come out of an ascending wedge. So the first possibility, not saying it's the highest probability, is going to be an ascending wedge break to the upside. This would be the case if we see a rally coming at the start of 2022. And the reason why we think that there's going to be a rally coming from the start of 2022 is for a couple of reasons. The first one mainly is to do with the institutional money that's now in the market. They have to balance their books. They have to realize some gains at the end of the year. A lot of their commissions or a lot of the money they make, as obviously fund managers, is based off a year-by-year return. So then if they have a asset that is doing well, they want to realize that gain, they want to make money for their investors, and they basically categorize if they did well or not well at the end of every year. So if they have a gain that they haven't realized that would benefit the portfolio, that's why they might sell, and that's why I think there's a lot of selling pressure coming into the market here, as well as the Asian news. A lot of like with the ban of trading in Asia, a lot of people are selling, and I think that's why we are seeing that sell off in Binance. There's some discussion that in crypto Twitter, but mainly, in my view, the reason why we are seeing a sell-off right now is because of the fact that institutional money has to get out of the market, and in a fresh 2022, they have an entire year, so they're going to put on risk what worked for them in 2021. If they bought Bitcoin, it was probably Bitcoin, unless they bought it near the highs in the summer, but most likely not. They have made profit in BTC, which then would give them a lot more reason to add on BTC to their portfolios at the start of 22. So if that is the case, we could be seeing a blow off top of the ascending wedge that we're currently seeing right now. And a confirmation of this ascending wedge break would be a break in this slightly series of higher highs. So if we get a slightly higher high, it's not going to be, oh my gosh, we just hit an all-time high. It's going to be absolutely blowing off. The major thing that we want to see is a shift in overall ascension for the price. So I'll just give you a quick example of here. So right now, let's say the price is ascending like this. We're ideally wanting to see the price start to ascend at a much greater speed. So what we see right now is, let's just go red. We see a nice trending market where we're making slightly higher highs and higher lows, nothing really crazy. What we want to see is an ascension in the appreciation of the price, because once this ascending wedge, ascending channel breaks, that's basically a call out for the bulls to try to push beyond the current ascension that they're having to really form that parabolic push that a lot of people were expecting at the end of the year. So that's basically the main potential outcome that could play if we do start to see this move up, trend higher, get close to the all-time high, and if we start to see that break in the ascending zone connecting the higher highs, really good opportunity for crypto to moon like many were expecting at the end of this year. If it does break this key level of confluence that we're in right now, it will not be looking fantastic. We do have a strong level of support around 41K, but if 41K breaks, it's not going to be too far until we are at like the 29, 28, 30K, which would not be phenomenal. One thing that could come is if we get like a slightly higher low, and then what we would be looking for from this point onwards. Let's break this, and let's bring our print screen here. What we would be looking at if we do start to get a slightly higher low around here is if we're able to get a series of higher lows and lower highs, and we're able to get a squeeze. So we get a strong push to the upside, we get a consolidation, we get the wind up for the next leg up. That's really the kind of market structure that I currently see if we do start to get a squeeze, contracting, and volatility. We don't really see a massive amount of contraction and volatility yet, but if we do start to see the volatility contract, maybe at the start of next year, we could be seeing another setup like we saw for this major symmetrical triangle that we broke out of in October 2020. So as of right now, there's nothing really like monumental that looks like the looks like the market's going to kind of play out, just in my personal opinion. I think as of right now, we are still consolidating. This is the time to slowly dollar cost average, really dive deep into your favorite alts or alts that you may not be aware of, do some research, do some due diligence to get a better understanding of what sort of investments are out there, because in my view, this is not the time to be aggressively trading every single day, because you're not going to get those nice, solid, sound follow-throughs that many people are expecting in a momentum-based trading strategy. If you are a mean reversion trader, if you have a bot, this would be a good time, because we are seeing the market go back to the mean fairly quickly. We aren't seeing those long kind of pushes where you get continuational pattern after continuational pattern. You're just kind of chopping, trading in a range. So if you do have a mean reversion strategy, could be good. But if you are a swing trader, if you are a momentum-based trader, now would be a really bad time to be in the markets, in my personal view, because you're just getting chopped around. We're now going to go into the more speculative financial instruments, I guess you could say, or market caps, where we're going to first look at the total 2, which is just excluding Bitcoin. And then we're going to be looking at the total 3, which is excluding both Bitcoin and Ethereum. So this is going to be the total 2. So this is just excluding Bitcoin. Let's just remove the drawings here and zoom out to a slightly smaller time frame here. Let's go on the daily. So we have been holding the previous major level of support if we look at it in terms of a zone. Now, ideally, we would have liked to hold like the round $1.2, $1.3 trillion mark. We haven't, but we are making structural lows. It's not like it's capitulating. It's not like it's aggressively pushing to the downside. We're just making structural lower lows and lower highs while the market is consolidating, and this isn't necessarily a bad thing. We are also squaring up here. If Bitcoin does move to the upside, we are in a nice little squeeze here. If it does press up, and if we start to break this nice zone of confluence here at around 1.4 trillion, it could be a new shift in trend for the altcoin market, where altcoins are going to be appreciating at least the same as Bitcoin or at a greater rate, depending on how the Bitcoin dominance chart looks. But right now, we are squeezing. If the price of Bitcoin does move to the downside and we drop below the current level of support at around, let's say, 47, we would probably be seeing a squeeze to the downside, which would not be good for alts. I think a lot of alts will be bleeding more than they are right now, which is obviously not a very nice thing to hear if you are a long-term investor. But, you know, diamond hands will prevail, in my personal view. So definitely stick it in there. I don't think that we are at the point where we're going to have a multi-year bear market that we saw at the start of 2018, kind of ended 2017 when the bull market ended. I think that this will be an extended market, but that's just a speculation. It's not like anyone has a crystal ball and they can guarantee it. The total 3, this would be excluding both Bitcoin and Ethereum, looks very similar. We have been seeing a slightly lower low than ideal, but we are still holding. We haven't made a lower low from the capitulation event that we had on December 3rd, December 4th, something around there. In terms of the Bitcoin dominance, we have been seeing altcoins hold their ground quite well. We're seeing things like Avalanche, Terra Luna really hold their ground. MATIC's also doing very well considering the certain circumstances that we have in the broader market. So the layer ones and some like the smaller altcoins, but a lot of the layer ones are holding their ground quite well. Some of the ones that aren't holding their ground, Cardano is bleeding quite heavily, Polkadot is bleeding quite heavily. Ethereum is kind of in the middle, but the altcoins that have been doing really well is AVAX or Avalanche, Terra Luna or just Luna, and MATIC is the 3 coins that I've noticed personally, kind of looking at the market daily, that have been outperforming the market, that has been relatively strong and is displaying relative strength when comparing it to the rest of the crypto market. So Bitcoin is holding their ground, but we do see like things like this is Luna on a just absolute tear. Let's go back on a time frame here into the weekly. It's just on an absolute monumental tear in terms of the overall momentum and the amount of market cap that it's taking in percentage to the total market cap of the crypto market. So, you know, things like Luna, AVAX is also a similar chart. Maybe we should be looking at a slightly smaller time frame like the 4-day. This is AVAX, just literally, you see the chart going from the bottom left to the top right. That's exactly what we're wanting to see. Luna, very similar chart, and MATIC, not as much because we still haven't really broken the all-time high, but you still do see that nice bottoming. Once you see a break of that 50% for MATIC, you start to see a very strong push for this asset. So those are looking really solid, and then we'll take a look at the price action of those as well. And then let's just take a look at like something like Polkadot. We can see big move to the downside. Not fantastic to see. We've been seeing for the past, on the 4-day time frame, just a lot of red candles. We are consolidating right now, but you're kind of catching a falling knife at this point. And then just another example would be Cardano. Exact same thing, but even worse. You know, it has been performing very well. If you invested pre the bull run boom that we had in October of 2020 until now, you'd be doing phenomenally, because it was at less than 0.5% in total dominance, went all the way up to over 4% in dominance, and now we're sitting at under 2%. So a wild ride for Cardano holders, but it, you know, it's still definitely a project that is well known. But in terms of my personal opinion, I think that there's not a lot of development going on. Like, there's not a ton of dApps that are being built on it. So things like AVAX, Luna are a lot more developer friendly, and they have a lot more activity for developers to build apps on, which is kind of a main driver of people wanting to get into the network, people wanting to invest in projects within that network. So now we're going to go into the actual price action of these different projects here. Ethereum is just under the 4K. Last time I checked, it was above the 4K, but it's just hovering kind of around that 4K mark. Very similar chart to what we saw for the total 2 and total 3. We can see pretty darn similar. And then if we go back to Ethereum, I don't know why that is flagged. There we go. Well, we'll look at a few other charts here. We'll move on to a smaller time frame just so we have a little bit of an understanding. Sol isn't doing phenomenal. It's just kind of hovering, making lower highs and higher lows. Let's just drop down to a smaller time frame here onto the daily. Is holding a nice little support. So this is the funnel apex of this structure right here. The apex of funnels is a major zone of confluence. So then we can see that's a nice little support that held right at that zone of confluence in conjunction with the apex of the central triangle. So that's really great to see. And then you do see a nice descending zone. It would be nice if this was a little bit lower, so you get these nice 3 lower highs to connect pretty evenly, but unfortunately we don't have that. So this is currently an unvalidated descending trend line connecting the lower highs. You have also a support zone, so we kind of have an expansionary, you could call it a megaphone formation, where you're getting an expansion in volatility. Not ideal. What we're looking for ideally is a contraction in volatility. We're getting a squeeze in the price action within a descending zone and an ascending zone, where you're getting kind of very similar to what we're seeing right here. So the major zone for Solana, still a ways away, but when you're looking at it from a large time frame, the structure that we need to see break would be this megaphone structure, and the zone of confluence that we need to break is around the 230 zone. So if we are able to break that 230 zone, it would be looking very solid for Solana. But as of right now, I'm just going to be holding. I have it staked. I'm not really going to be doing anything. I'm not selling. I'm just patiently waiting. It is a very active network. Like, the NFT space is huge. There is a lot of projects that are built on Solana that I'm very interested in. Seerum's a really cool one. Step Finance is a really cool one. So those are some of the things that I'm currently invested in. They have been bleeding quite a bit, but I'm just going to be holding. I have a long-term approach for those investments, so it's not like I am crying, upset, or anything. It's just the market. It is what it is, and we just have to be able to kind of invest as much as we are comfortable to invest as much that we are comfortable losing, because at the end of the day, if you can't handle your emotions, you are not going to be making sound investment choices and decisions. You're going to be all over the place. You're going to sell when you shouldn't be selling. You're going to be buying when you shouldn't be buying. If you have a more relaxed, calm, cool, collected mindset when you are in the market, it will make the decision making 100 times easier, definitely. So we're now going to be moving on to a different chart here. Binance Coin, kind of the same thing. We're just kind of hovering above a major zone at around $500. It's actually looking very solid. So we had a lot of resistance around $500. We were able to break above it. We came back over top of the $500, and now we're squeezing against the $500 zone as a support, creating a nice descending triangle formation. And we have a nice little consolidation zone right there. So definitely still got a little ways to go. We have a potential level of resistance at 575 as well. So a couple of things that could happen is, even if it does break this, we could be looking for a squeeze like that. And then once that squeezes, that would be a really good opportunity to potentially look for some leverage positions, or look at some potential plays within the Binance network, like PancakeSwap or whatever else you're looking into. So that could be a possibility, but as of this point right now, I would say I'm going to be a little bit more hesitant until we start to see a really strong break within this structure, within this descending zone, as we can see right here. So if we clean this up a little bit, like so, this is the first zone right there, and then we can see the second zone if we go on to a different time frame. Makes it a little bit easier to identify. Right around there, you see lots of initial resistance turns to support. This would be a big wick at one point. Lots of support here, lots of support here, turned into a resistance. So you're going to get lots of resistance here in confluence within this descending zone. So the point at which I'm going to be turning bullish for Binance Coin is when it breaks above the 575 range. So that's going to be Binance Coin. We'll just leave that at that. AVAX is looking very solid. Let's just remove the drawings there. Not at its all-time high yet, but this major break really started the momentum for AVAX. Let's get the structure right there, and then the zone of confluence was right here. As we can see, very strong push to the upside here, and we were able to hold this previous high as a new level of support. We squeezed yet again, so let's break down a smaller time frame here onto, let's say, this one, which is the 6 hour. We have broken a nice structure. Let's try to go here and actually use that as a wick instead, because it'll form a much better structure. Like so. So you get the first rejection here, you get the second rejection here, and then you have the third rejection here, and then you break within a zone of confluence, as you can see. Major zone of first resistance, turn to support, turn to resistance, and then it just continued to go back down, and then we had it as a resistance, turn to support, and now we are trending back up. So it does look pretty solid in terms of the smaller time frames here. Let's take a look on the 6 hour and then discuss the potential targets that we have here, because this is the first major structure that actually looks like it's broken out. And that's going to be another wedge that we could draw a target from. So we'll take a look at the large target, which is the descending triangle. So right here to here, copy paste, and this is the breakout zone right there. So the potential target is going to be, let's take a look here. First major target is going to be around 180. We can also get a little bit more confluence from this zone right here. It broke out right there. So we'll go here, and we will get the target. So then we have our first initial target right there. Don't think it's a coincidence, but hey, that's just me. So we're going to be looking at the first potential zone at being around 140, because we see it's a 61.8% there. It was a previous major final target for this structure right here. First major zone for this new structure is going to be 181. We then have the second target at 226 and the final target at basically $300 for AVAX. So that's going to be the current targets that we have for the kind of longer term play for AVAX. We'll keep all that. And then we can also derive another one if we just use the wedge itself. So we'll go here, and we can derive other targets if need be and see if they have any confluence with previous structures as well. But I'll just keep the one that I had previously on hand. It does look very strong. Like I said, AVAX, Luna, MATIC, those are the ones that I'll be looking at because they have shown significant relative strength during the time of consolidation. Kind of similar to what we saw with Sol. So if we take a zoom out here, remember we were talking about it at like $25, $28. This was a major structure that we were calling for a very long time. If you do recall us, or if you have been following Performante for the summer, this was actually showing relative strength because we were seeing higher lows while the rest of the market was dumping. Like during this summer point of 2021, like let's say for example, look what happened to Polkadot. Just demolished, decimated. But then with Solana, we're seeing higher lows, right? Total relative strength. And we can see Solana's not showing that same relative strength during this consolidation, but things like AVAX is showing that relative strength during this consolidation. Luna is showing even greater relative strength during this consolidation. So these are the things I'm looking at when we're having these kind of mini consolidations, or what like the kind of Bitcoin maxis call them bear markets. I don't personally think that they're bear markets just yet. It's just a consolidation. You can't have it go straight up without having some sort of pullbacks. It's going to weed out the weak hands, which is necessary. So it's not all bad news bears, really. So let's make it to a smaller time frame here. We can see that Luna was consolidating. Let's just go and take a picture here. We have been grinding. Now, I keep in mind, going to be 100% transparent with this. I did think that Luna was going to be hitting $100 in November. I was very wrong about that, but we were close. We were at that $98 mark, 95, whatever it came close to. So we are getting close, but we have not yet hit that $100 mark. I'm very bullish on Terra Luna. A lot of the projects I'm very keen on. Kujira, kind of found it recently. You can basically buy discounted Luna by providing liquidity to the market, and then the liquidated B Luna is then rewarded to you for providing liquidity for the liquidation. So it's pretty cool, very interesting project. And when you're talking about the actual price action of Luna, we can see it's been grinding. This is exactly what I'm talking about for the ascending wedge, like we talked about, where you get a initial break, you get a pullback, and then it changes the ascension of the price climbing to the upside. We see that this is kind of the, let's say, the best fit line for the ascension. Now you might get a best fit line higher. So it's going to increase the steepness of the climb, which is exactly what we're looking for. And this is the pullback. So this is the impulsive push to break out of the structure that we're seeing right here. This is the pullback to validate the previous resistance as a new level of support. Also to wind up. So we can see, let's just take a look here. This is the wind up for the next leg higher. So we needed the impulsive push to break out of the zone. We needed the consolidation and the contraction to really get the momentum to break. And that's exactly what we saw right here. So what we're seeing right now is a strong bullish push, continuational. Potential reversal point would be here if it does see a pullback around the $75 zone. So as of right now, I'm obviously an investor in Luna. I'm going to be holding. If we do start to see a pullback at around 77, could be a good opportunity to enter a little bit. But as of right now, I'm going to be a little bit more hesitant on adding more positions to my, I guess you could say, blue chip crypto holdings. I'm kind of speculating on like the DeFi 2.0 own fork type investments. Palma definitely knows that. We unfortunately got rug pulled with the Brig, but you know, that is life. That is a part of being in the very speculative DeFi space. But hey, that is for another video altogether. All right, now we're going to be skipping a few of them. I don't want this video to take too long here. Those are the main ones that I wanted to talk about, is Luna, AVAX, as well as MATIC. MATIC also doing really well. Let's just take a zoom out here onto, let's say, the daily. MATIC has yet to break an all-time high, but man, we are seeing a strong push. Look at that push, and then we can also draw this zone here. A lot of them are creating ascending wedges, which is really nice to see. I think that's going to be the best fit line. Resistance, support, support, resistance. Oh yeah, this is going to be it right here. And then we can go here, and then we can draw our best fit point of the middle for this zone. A little bit higher. So we haven't broken it yet, but it does look like we are forming a nice level of confluence where we could see that break in the pullback, because exactly the same as Luna, kind of think about the structure in which these break out. You're seeing a consolidation. You need to see an impulsive push break the previous structure. Then we're looking for a contraction to carry the momentum, right? In MATIC, we're currently see a structure. We are, in my opinion, just breaking out of a structure here. We'll take a look at a smaller time frame. If it does break, we're expecting to see a pullback, validating the previous resistance as a new level of support, as well as squeezing the volatility, contracting the volatility, so we're able to get the momentum to push and break out of this trading range, this ascending trading range, to form basically a higher level of ascension for the price. So when we're taking a look at a smaller time frame, we should be seeing a nice potential squeeze, and although it's not perfect, I can't really call this perfect. If this was on a major low, I would say that this is a potential reverse head and shoulders, as we can see within the left shoulder, within the head, within the right shoulder, and then the blast off, but we're kind of not really at a major low. Like if it was here, obviously that'd be a little bit different, but this is just kind of like a relative low, not really a major low against a key level of support. So this isn't the ideal squeeze that I'd be looking for, but still pretty solid. It'd be really nice if we saw kind of like a higher low from this one right here, if we got like a higher low here, because then we'd be forming a very strong ascending base, and then we got like a capping resistance zone that is creating the squeeze, and then this is the initial push or the initial momentum from that squeeze. So not as ideal, not as pretty, not as structured as Luna, but still showing relative strength nonetheless. All right, so not going to go too much into the rest of the markets here, because that's going to be the main things that we're going to be looking at. Now, if there is a particular coin that you would like me to overview for the next crypto market update, please let me know in the comments below, and I'll be happily able to check that out for you. So that is going to sum up this week's crypto market update. Thank you very much for tuning in. If you thought this was useful, educational, entertaining, it would mean the world if you do give this video a thumbs up and subscribe, so we know that we should be continuing to make videos like this one. Like I said, if you are interested in joining our community, you can find the link to our Discord on our website, performante.ca, as well as being able to find the rest of the social media channels that we are posting very frequently on. Thank you very much for tuning in on this beautiful December day, and until next time, have a good one, traders.